Well, ladies and gentlemen, yes, we are truly... No, I can't really say that now, can I? We just had some PPI data coming through. I saw that on the meme channel, man. I know it isn't CPI. Just get it all mixed up, don't we? Welcome. So retail sales coming a little bit lower, but the cost of it has actually gone up-ish. Went to 2.7%, if knowledge serves me correctly. Yes, US PPIs come in year on year at 2.7. What does that tell you? Well, it tells you that in the future, inflation could be knocking on the door again. Now, what am I making reference to in regards to the story about the rate cut? Well, Besant earlier on, Treasury Secretary, has turned around and says, we've got 5 candidates that we could be considering. That's going to be taking over the new Fed chair role. Powell's going to be gone, man. It's not good, man. I'm going to miss Powell because of his brutal nature. But there's something that's starting to look very interesting on the idea that we may have an agenda at hand which could really compromise the whole story. You're probably looking at the markets right now thinking, hold on a second, why isn't everything pumping up? Surely that if the idea of the PPI is coming in a little bit lower because core PPI came in down, that would mean everything's all good, really. It means that they're not increasing the cost of goods, or finished goods, should I say. Have you not noticed that all the Fed speakers have all been banging on about the idea that they want rate cuts? Then Mirren's turned around and said that, yeah, we could get rate cuts, but we got to be really careful. Isn't Mirren Donald Trump's dude? UBS's boss man, Paul Donovan's turned around and said that the Federal Reserve is playing a very, very fine game here. And that all these Fed speakers that are coming out talking about rate cuts, given that one of them, Mr. Waller, who was known for his hawkish sentiment back in the day, he was naturally a dude who was always keep interest rates high. We must keep it high because we've got to keep inflation down. He's been banging on about the idea that we need to be cutting now, and he's trying to get this cut pushed out to everyone. In other words, all these FOMC guys are trying to get the spot to become Fed chair. That's what's going on. They all want a shot at the Fed. Well, to become Fed chair, the top boy. You know, how cool is it? Look how much credit, look at Powell, man. Everyone loves Powell. And a couple of these FOMC speakers, they want a piece of that cake. And that's what the motivation is. But what we're going to do is going to break down the idea, okay, that if we're getting interest rate cuts prematurely, what's that going to do? We need to understand what's going on right now. That would suggest that if we do get the rate cut, is it good for the markets now, but it's going to be a problem later on? Maybe if we did hold on the interest rates, then the future's going to be much more better, is it? I mean, come on, let's think about it. If the dual mandate is to keep price stability and make sure that employment is at its best, then trying to work out if Donald Trump's going to pick you or me as one of the Fed chair speakers and what have you, and be in charge of that role, what are we in? I mean, you can't take the US seriously when you're in like nearly $37 trillion worth of debt and counting. So you already know that the system's broken. But this is an absolute joke. Let's break it down, ladies and gentlemen, so you can make sense of the madness that is unfolding. So, Bloomberg, it's not really been saying too much about what's going on. However, let me explain to you what is really happening right now. I'm going to give you a couple of events that just stinks of correction. First one, Ukraine. Apparently, they've agreed to a US brokered peace plan. Wonderful. But what about the Kremlin? Only yesterday, the Kremlin was like, nah, sorry, we don't like these T's and C's that you're coming out with. And Donald Trump has turned around and said that Putin is the guy who's going to be the make or break. It's up to him now. When originally Putin was all cool for it. And then Zelensky was like, no, not interested. Now Zelensky's coming into play saying, okay, then we can end this war right now. And then Putin's like, well, we're not too keen on that. And then only a few hours ago, done another attack. So what is this guy really wanting to expect the Nobel Prize for peace? Whenever he declares that there's going to be an end to the war, firing more missiles at each other. He's a provocateur, as they would say. But anyways, that's the first thing. We've got another brewing circumstance. China criticizes Japan's plan to deploy missiles on an island near Taiwan. Japan turned around and said, anyone that attacks Taiwan is attacking Japan. Is this your black swan? All of a sudden, Miss Takanachi, whatever her name is, all right, is coming with a $25 trillion stimulus plan for Japan. She's already got the problem with the interest rate hikes. And even worse, let me tell you, one of these two instances is going to happen. One's going to happen sooner. And the other one, of course, we're speculating on it, but I believe it is going to happen. This thing right here. Yen is under pressure amid speculative testing. We're going into the Thanksgiving period, ladies and gents, and that is usually a time where liquidity is sort of light. Going into the article, it goes on to say that the Japanese yen faces continued pressure as geopolitical tensions over Taiwan and speculative trading test authorities' tolerance, with potential Bank of Japan intervention looming during the thin Thanksgiving week. What is that saying to you? They're going to buy dollars. They're going to buy dollars. Analysts are coming out with the idea that dollar yen can't actually succeed above the 157, and it seems like it's a bit of a wall. Okay, hold on a second. Let's just try and work out that story. Is it really a wall? I don't think it's a wall. I think this is a pullback, because as long as Japan doesn't act and does not intervene, when if they do intervene, now would be the perfect time to do it, because the volumes are very, very thin. They can really manipulate the dollar, send dollar yen down, okay, by buying up a load of dollars, which would naturally increase the value of the yen, okay, which would then naturally, if Japan were to cause any problems with China regarding Taiwan, that would stimulate the idea of being in the yen, and they would not increase the interest rates. They wouldn't. They would get investors to go straight into the yen. So which one is it? Are they going to engineer potential tensions to force investors to safe havens into the yen? Or are they going to use the actual dollar and actually buy a load of it to bring down the pressure that dollar yen is bringing on the Japanese economy? Because it's hurting them when the dollar is so strong. It hurts trade. Let's put some tariffs on top of that, ladies and gentlemen. You can appreciate that that is going to be an issue. And workers in Japan are demanding more on the wages because the tariffs are being trickled into Japan and the economy. What do you want me to say to you? It's an absolute dog show. Here is where it gets interesting. Rate cut speculation raises concerns. UBS. The largest bank in Switzerland, man. Like these guys, $7 trillion nearly in management of assets. Like these guys are talking. There's a reason why. Goes into it. Paul Donovan says that the implications of the Federal Reserve Governor Christopher Waller's advocacy for a December rate cut is emphasizing the potential risks to the U.S. economy. Basically, what he's saying is this. Listen to this. Federal Reserve Governor Waller advocated a December rate cut, citing labor markets. So in other words, the labor market is struggling, so we need to cut the rates, because if the labor market is struggling, it means that people aren't working, that companies are slowing things down. We need to stimulate the economy. Cool. Says if Waller is seriously concerned about employment, this would be a worrying signal for the US economy, where growth depends on low unemployment fears, right? In other words, you've got to focus on inflation, okay? Goes on to it and says this: if this is an attempt to be picked by US Donald Trump as the new Fed chair, markets are likely to focus on the potential accommodation and ignore the suggestions of economic risk. That is exactly what's going on. Bess had come out earlier on saying that there are 5 candidates. Is Waller one of them? Or is Waller trying to be one of them? All week last week, we had Fed speakers just talking and talking about rate cuts, rate cuts, rate cuts. Only the few that probably believe that they're not going to get a chance to get into the Fed chair were coming out with the sense that, yeah, we've got the problem with inflation. And tariffs, they are causing a little bit of a concern, but it looks like it's going to be a bit of a blip in the system. But the tariffs are still around. So we don't know the true implications of what we can expect if we were to cut and if we were not to cut. We don't have enough data. The data that's come out today is for September. But what about October's? What about November's? Is that going to be coming into play? Well, apparently that's coming out next year. So again, the market is only relying on whatever is being said. And there's no evidence to back it. That just shows you how prone the market can be to information and not statistical data. We're talking, I think we should have a rate cut. Yay! Let's just go crazy and go risk on. So now let's just break down the whole story, okay? If Bessent's saying that there's a very good chance that Trump's going to name the new Fed chair before Christmas, then that would explain why Waller and all these guys are starting to change their tone about being dovish. That means cut the rates. All right, then. So let's just break down what's just happened. Cool. In front of you, okay? Inside of this story right here is the credit card tightening standards versus demand. Now, if we actually just consider the story with what we've just said, it says here that most of the spending that is happening right now with consumers is from middle class to high earner consumers, okay? It's like they're absorbing this idea of inflation. In other words, they don't care because they can afford to buy whatever's going off, all right? But you need to have an even distribution of people taking it on. Okay, you need people, lots of people to be spending, not just one part of people. So you're saying to me that the US economy is only surviving because people with a lot of money are spending it? Is that consistent? No. You need to have everyone spending money to assume that everything's all good. Now, it goes on to say this, that credit card spending data suggests that middle and higher income consumers in the US continue to be confident enough to spend, but they're not spending in retail outlets. So what could they be spending on? It could be on holidays, it could be on automaker, whatever, okay? But it's the credit card behavior that's going to tell you where we are with it. And that's what this chart is. So blue line shows you credit standards, the net percentage of banks tightening standards for credit card loans. Equally, the red line is net percentage of banks reporting stronger demand for credit card loans, okay? Look what's going on. We're about to see a crossover in the demand for credit cards, okay? So hold on a second. Right now, the US debt is climbing. Interest rates are still relatively high. People have been going into the idea that rates are going to be cut. So that clearly looks like banks are offering much cheaper rates on credit cards. Is that true? I don't know, because only you guys are going to be able to tell me that. If you're watching your TV programs or you're seeing advertisements coming through, are your banks offering good rates or interest rate charges on credit cards? Because according to this, there is now a demand for credit card loans. Equally, the tightening is actually coming down. So they're getting loose with the credit again. And now we're doing it? We're getting loose with it now? When before, when the interest rates were high, they were tight. Why are you being tight when the interest rates are high? Like, it makes sense that you want to encourage, good credit card consumers, but now that the interest rates could be cut, may not be cut, why are you loosening up now? Because banks are worried. That's why. They are worried that the consumer isn't spending enough money. So relying on the idea that middle class and, of course, high earners are spending money, that's not enough. Because why would you have a credit card and then put that to work as a high earner? I mean, of course, if you're going to play certain things, I get it. But the narrative of the bigger population in the US, you need as many people to consume as much credit as possible from a bank's perspective because you earn off that. And it's all about the bottom line. Now we're going to get into something interesting, just to help you understand what the story is. Do you remember this chart? City Revisions Index. So with all what's going on with Ukraine, China, the yen, the USD, and all of that stuff, do you remember this bad boy right here? This is the City Earnings Revision Index, which shows us the number of companies that the Citibank is revising the earnings expectations, okay? In other words, do they think everything is looking good, right? Looks like things are all right. So we're trying to justify right now, guys, the logic that are we going to go back into a bull market with all of what's going on? Is the interest rate cut valid to cut now? Okay. Is it going to be worth doing so? Or can we sustain it if the interest rates are going to stay high? According to this, it's showing us that there are some more revisions. They've expanded that, by increasing it on the earnings per share has increased to 81.27. Previous was 79.34. So the majority of companies in the S&P are actually declaring positive results and everything is all good. Alibaba is up 34%. They smashed it on their earnings. You've seen Akambi and Stitch. They've done really well. So it looks like everything's all good for companies. And according to Citi, it looks like the revisions are well in their right because companies are doing well. I mean, if we just look at this for a second, where was it? This is where it gets interesting. Nvidia shares fall on 3% on Meta will use Google AI chips. What the hell? Why wouldn't they use Nvidia? Well, great news for Google. Check this out. Look what Google's doing in pre-markets. Where we at? Google has just taken a nice, wonderful move to the upside. Where we at? Here we go. Look at that. All-time high, ladies and gentlemen. All-time high. It's just not stopped. Where's Nvidia? Why isn't Nvidia at all-time high? That's a problem. The largest stock in the game, right, by market cap, ain't even at its all-time highs. And Google's just killing it, given that, Warren Buffett has increased a stake in Google. He's actually purchased Google, and he's still sat in $365 billion worth of cash. All right. But Google, I mean, surely he knew something. Surely he knew about this. All right. It's who you know, man. That is the truth, ladies and gentlemen. It's who you know. So just to review it all, right, before we get into some more information about the markets, China, tensions with Japan, Taiwan, intervention, thin markets, be on the lookout for the yen and the dollar. Because if they do flood the markets with dollars, or they go and buy a load of dollars and sell them into yen, dollar's going to go down. Euro's going to move up. Yen's going to move up. The bonds are going to go down. Or should I say the bonds will go up. But Bitcoin? Well. Let's break it all down, ladies and gentlemen, understand where we are. So, in front of you is the market. What's going on in the market? It's kind of interesting. Google's up 3.4% and Nvidia's down 4.2%. Futures markets, orange juice has been smashing it. Look at that. It's up nearly 2.92%. Copper's coming in and silver, lean hog, soybean, lumber, gold's up there, oats, platinum. So basically all your household stuff is doing really well. And Bitcoin is... Where's Bitcoin? Oh, Bitcoin looks like it's down. One day performance minus 2%. Well, 2.14. But of course, that's not really the truth because if we just go over to Bitcoin right now, and you can see it's nearly down. Yeah, 1.55%. Okay, we can deal with a little bit of a correction right there. So what's the market doing? Well, let's just go over to the NASDAQ for a second. NASDAQ looks like it could be pulling back ever so slightly, but we'd want to see it pull back. The results from the CPI and the PPI data itself are somewhat mixed, man. It's just all over the spot, but this is not going to give us the true representation of where we are with the rates. It won't. Quickly go over to it right now. Let's just refresh this to understand where we are with everything. How many of you in the live stream today with me? Just want to do some housekeeping. Okay, 180 of you are in the live stream. 180 of you are in the live stream. That's crazy. I mean, 180 of you like the live stream. But yeah. Based on today's data, we've had an increase of 84%. So that was up from 80 to 84.7% on the rate cut. So that's good news. So the market has come to accept the idea that, yeah, okay, we're probably going to get the rate cut in December anyway. But what I said earlier on about the narrative of why all these speakers are coming out is because they want a shot at the idea of getting part and named as a new chair member, okay, which is quite comical to say the least. Just try and keep Donald Trump happy and say, okay, come on then. You can be our Fed chair, keep the rates as low as you physically can. So every FOMC will be, no, we're not cutting. No, we're not going to increase our interest rates. But yeah, but inflation's at 7%. Never mind, we should be cutting. You know, we need to make it easier for money to work around. So basically you're devaluing your dollar so badly with the rates being so high. But let me just draw your attention to a couple of things. So this chart right here, smart money, dumb money, still creeped up ever so slightly. Okay, so we just got to keep an eye out on that. And retail is starting to bounce away from the lows. Okay, so that's good news. But what you got to look at is this risk on off indicator. So we've come down to an extreme in terms of the risk off. So a lot of investors have been on risk off mentality. And when we actually zoom into this and look at it, you can see that we're coming back away from the extreme, which is good news. So when it's red, it means that investors are not looking to put risk on. When it's black, it means investors have got risk on. Okay, so we're starting to see a little bit of a turn. So we really need to have more reasons to believe that the market is going to want to climb higher, okay? But right now, all the market is relying on is the idea of interest rates being cut. And that is evident with this story right here, with the interest rate expectations going up to 84.7%. Now, take that into consideration, ladies and gentlemen, with all of what we've got going off in the market, with the news and what have you, with Besant and all that madness. Let's go over to Bitcoin to understand how that's going to impact Bitcoin. Quite frankly, if the market goes down in terms of the stock market, Bitcoin's going to go down. It's simple as that. Quickly going over to your Arkham as such, just to understand where we are with everything. Come on. Yes, I am a human being. Here we go. All right, so this is where we are. So we haven't really seen too much activity. I mean, 2 hours ago, we saw black. What the hell? 2 hours ago. It's offloading again. So yesterday's inflows were just... No, it wasn't that many inflows yesterday. So what the hell are they doing? They are offloading this crazy. They are actually going to mark it down quite bad, aren't they? I mean, it all depends on the actual behavior of price action, all right? Because they did sell yesterday. They didn't sell too much yesterday and price moved up. So when they did declare the selling of the Bitcoin, that then came in, but the price moved up. So the logic could be on the assumption that we could be in for a very interesting ride today. We're starting to see some behavior in the spot market again. Just paying attention to this. If you remember yesterday's live stream when we saw the spot order book depth difference chart, it was all green, Bitcoin's down, and then it started to become red, and then price started to move up, okay? But we've now started to see some interest over here on bid side, so it looks like the bids are still coming in to buy up Bitcoin. Looking at Bitcoin's price action, you can see we've got this little bounce up from yesterday. We've got a few bids inside of this range right here, and we got a couple of bids at $12 million worth of Bitcoin coming in at that price point, whatever it was just a second ago. What was it, 10 million? Yeah, 12 million and 10 million. There you go, 12 million, 86,611. Okay, so that kind of puts things into perspective. We do have a few offers coming into play, 13 million at the top side over there. So that is interesting. But zooming out overall, we still got a few more bids down below. And it is something that we got to pay attention to. But the market is going to be prone to anything that anyone says about the interest rates. And if we've got any more speakers coming out today, let me just check that out. Do we have any more speakers talking? Let me just put all of this here. Have we got any speakers coming out today? No, we've got pending home sales at 3 p.m., which I'm not too fussed about. But there's no real speakers coming out. Bank of Japan's core CPI data is coming out tomorrow, which is going to be important, which is going to give them the stimulus to whether they should be increasing the rates or not. But there's no one else speaking. No FOMC speakers are going to be saying anything or scheduled to be speaking. That doesn't mean that they're not going to be speaking in any other events like on CNBC or Bloomberg or anything like that, okay? So just take that into consideration. Yeah, so with Bitcoin's price action going into the daily, overall, you do have Bitcoin still trading below the 5 and 13 EMA. That is a bit of a problem for the trend. Trend is suggesting that Bitcoin still could be going lower, but we've got this vector candle range right here that I will be expecting Bitcoin to come and take. I will be expecting Bitcoin to take the 97, 99, even coming back to 100K. That is my logic. I do expect it to do that because it hasn't stopped going down. But once the market then starts to stabilize off the back of the data that's been released, then of course Bitcoin is going to naturally climb up. All these guys that have been buying up the Bitcoin are going to want to offer it out. So then you've effectively got the logic of retrace continuation back into the range, because I do want to see Bitcoin to come down and take out this 74,000. I will be much happier if Bitcoin were to clear 74, because we'll get more information about investors' intention with Bitcoin at these levels. Quickly going over to other assets to put things into perspective for you all. Gold. So gold's price action, it's currently trading plus 0.2% for the day. It is moving up. I've said this to you. It's going to move up towards these vectors. It's going to clear this red vector candle region right here. That is my expectation, because the anticipation of interest rate cuts is being developed. And it looks like we are going to get the rate cuts because they're betting for it. So we don't need to worry too much about that. But of course, if tensions overseas with Ukraine and Russia still continue, then of course, gold is more than likely going to continue up. But gold was going up even when they did say they were going to come to a peace talk. I don't think investors are seeking safety in gold because they're concerned about things. It's because they know that interest rates are going to be cut. So there's no point in retaining dollars, especially when your dollar does not carry any value whatsoever. Quickly going over to the dollar itself. There you go. Depreciation on the dollar. It has actually broken down. The euro has actually moved up on the back of the data that's come out. But euro actually moved higher today on the peace talks from Ukraine. But we're still waiting for the Kremlin to decide whether they are happy with those peace talks. Okay, so that's something to take into consideration. Going over into other assets like Solana. Solana's done a good job to hold out on this 50 EMA zone. Going into the daily time frame, you can see Solana has swept this liquidity right here. And I've said this before. When you look at Solana and you look at Ethereum, Ethereum always does something first and then Bitcoin does it after. Of course, Ethereum doesn't require as much liquidity as Bitcoin does to move, okay? So you've got to take into consideration that Ethereum has spent more time at the 800 EMA than what Bitcoin has. Bitcoin only tested it once and it hasn't actually maneuvered around that spot just yet. So we've got to be very careful with how Bitcoin is behaving. Going into the US dominance chart, we're at a very significant point. And I don't think that the sentiment in crypto is favoring lower prices. I believe it's favoring higher prices, but it's all prone to the idea of what's going on with the interest rates. And that's something you've got to take into your mind. There's no point in looking at indicators. There's no point in looking at anything other than where are we with the rates? Are we going to get the cut? Because yesterday it was all about we're going to get a cut. And you saw what happened to the marketplace. Forget this relationship that's happened right now with Nvidia and Google. That's great news. Of course it is. It just means that the revenue's going to Google, so we go invest in Google. It's still deemed as a big tech stock. It can still obviously give sentiment and optimism towards the NASDAQ to start marking higher, okay? But given that it hasn't gone to Nvidia, that could all be down to a number of factors. We don't really fully know. It says here, the information reported that Meta is considering using Google's Tensor processing units in its data centers in 2027. So something that's going to happen in 2027, they're telling us now to keep the market alive, if I'm quite frank with you. And it sure did make things go alive for Google. As you can see, Google has traded very well in the market at pre-open. Look at that. It's just doing great. Absolutely great. It's the only stock up there that's killing it all-time highs, in my opinion, you know? Questions. Tino, looks like Bitcoin is testing the psychological high on the 1 hour, so could be that it should go up from here if support is good. When you are looking for price to do something at a specific zone, right? Don't look at it as it hits this line and goes. Look at it as what is price doing at that point in time. And if you notice price holding a specific range, so if you go to Bitcoin and look at the psychological ranges, you can see that when you profile what price has been doing at the psychological levels, look at what it's been doing at the start of the psychological levels. So once the psychological levels form, look at all this activity right here. It's absolutely mad. So you've got to try and assume that when you're looking at price action, when it comes towards these levels, do you see this behavior? Because there's clearly an intention to mark it up from this point. The range has been set. And where did they do that again? They did it here. Isn't it mad how the same behavior here happened smack bang at that psychological range? And then price then continues to the upside. Okay? So the idea is that if the psychological high right here is going to act as an area of interest, rather than support, call it interest, because then it's going to align you with the idea of the bids and the offers, who's buying, who's selling. And when you start paying attention to how price behaves around that zone, the less time they spend here, the more indication you're going to get that they are going to try and move away from it. The same way if price comes all the way down to the psychological low, the less time they spend at that point, the more you can relate the idea of what they tried to do at the start of the week. Okay? In my opinion, if Bitcoin was not prone to changes in the interest rates and we knew where we were with the interest rates and we knew we were getting the path to get to cutting, the market will just keep on pumping up. What you're seeing now is consolidation across the board because we don't have a clear view of where we are with the marketplace. And that's the problem that we've got. Once we eliminate the concept of, are we going to get a cut or not? And then you come back to the charts and you see this story here that bets and expectations are coming in to see the cut. The market's going to price that logic in and it's just going to keep doing what it needs to do off the back of the logic that interest rates are getting cut. That means money is going to be accessible. Dollar's going to lose its value. I'm going to put myself in a position to get assets that are against the US dollar and trade from that logic. Okay? So you've got to really take that into consideration, ladies and gentlemen. Yeah, happy holidays. Happy holidays to you all. Happy Thanksgiving. Is it possible for the Fed to possibly raise rates in retaliation for the new Fed chair coming in? I promise you now, the new Fed chairperson that's coming in is not going to increase the rates. No chance. There is no chance. They're going to cherry pick their new Fed chair member. They ain't going to put in someone neutral. And if they do, I will be shocked, because they will not put someone in that does not fit the agenda of what Donald Trump wants to do. Donald Trump says that inflation is at 1.5%. So why the hell do we need any data for the Federal Reserve? Just listen to what Trump says, yeah? That's exactly what he's saying, all right? Labor market is doing great. We've got what we got here? The labor market's doing great. Here we go. Private payroll losses accelerated in the past 4 weeks, ADP reports, all right? They didn't tell us anything about that. So the ADP non-farm is pretty much telling us that payroll losses have accelerated. And on top of that, your government shutdown cost America what? It cost it 1.7% on the GDP, $11 billion. I'm telling you now, this story is all about who's going to just impress Trump. And your economy lies on that. That's the crazy thing. You knew your economy was dodged when your debt was just shooting up and your dollar has no value. But now the person that's going to step in to decide the fate of whether money should be borrowed at the rates that we've got it at is going to be based on who's going to kiss Donald Trump. What do you want me to say? Welcome to economics. Welcome to the world of finance, because it wasn't like this before. Hell no. Hell no. Today I have no question. That's a first, priest. Just smash the like button if you haven't yet and have a wonderful day. Yes, that is very true. Remember, ladies and gentlemen, in the description, you've got the discount code, 20% off platinum membership. The masterclass, redo of the masterclasses are complete. We're finished with it. Now we're just going to get it all set up on the website. So I'll be letting you guys know about that once that happens. And you'll be then free to learn about the psychological levels, because the psychological levels on there, that video is an hour long. So you're going to know everything you need to know about that in depth. Okay. So yes, an increase in interest rates. Yeah, that will not happen. If we had Powell in charge, I think Powell would warrant that. But now they're going to look to replace him by Christmas. That's so sad. I'm gutted. If they replace Powell this year, I will wear a suit with a purple tie to commemorate Powell. I will drop a suit just to mourn the loss of such a brilliant Fed chair. I'll wear some glasses and I will start the live stream. I'll try to say it without laughing, but I will say, good afternoon. Flipping, I'll be gutted, man. I'll be gutted. NASDAQ open down. Here we go. Let's just quickly have a look at the marketplace. Here we go. So, NASDAQ opening down. Come on. It's not down. It's not down. Down's 24,200. Don't worry about that. I'm not too fussed about that. Yeah, mate, can you please look at HBL stock? What? MAGA hat is a must. Okay, don't bother. Don't bother. That's a bit sour, bro. I see you've lost the bet already. Yes, that is true. Stop hunt on NASDAQ. Yes, more than likely. There is a stop hunt. Look, you just got to pay attention to just what's going on in the bid order flow, okay? Bids are coming in on Bitcoin, all right? That's all that matters to me. I just need to pay attention to the bids. Once we start seeing a rotation in the red, then we can understand that there could be a bit of a change happening in the marketplace. Cash is king. That is very true. Your cash is king, okay? But your cash doesn't mean anything. It doesn't, because your cash is depreciating, all right? Your cash is depreciating. I've said that you can't sleep on the dollar, okay? This little pullback is all good, all right? But the only time the dollar is going to be compromised if Bank of Japan do step in, all right? So they're either going to step in and cut the rates, which will have an impact on the dollar, carry trade unwind, or they're going to go and flood the markets and buy a load of dollars, okay? But if they're waiting for the Thanksgiving weekend, they don't need to buy that many dollars to create volatility to offset the pricing of dollar yen. Yeah? Take that into consideration. Where are all my bold people at? Where are all my bold people and all my Mexicans at, man? If you do higher time frames, then zoom in and you'll have price maps essentially. Yeah, that's very true. Gold is king. Gold is the king. Gold is the king. You know, you have to clear your throat 5,000 times. That is very true. That is very true. Gold, yeah, it's all about HBO stock market investments in BTC. Oh, I haven't seen that. I haven't seen that. I haven't seen that stock. I'll dive into that and I'll check it out later on for you. What is that? Tino, are you live? Of course I'm live. What's my price projection for Circle in 2-3 years? Right, listen, I was thinking about this, okay? I was thinking about a strategy for people to try and trade with, if you were to split your portfolio and you were to look at it and say, right, what assets can I trade? Can I trade Forex? Can I trade stocks? Can I trade indices? Can I trade commodities? Okay. Now, in my honest opinion, right, the best way for you to really exploit what's going on is this. We're in an easing cycle right now. That means interest rates are getting cut. How they get there is irrelevant. But the point is how much can you absorb? Okay. So if you're in a position to, like, for example, you place trades, let's say you buy Bitcoin on spot, okay, and you buy gold as well, right? Wherever you decide to do that, of course, obviously, you know, when you do it with, like, for example, BTCC, where you can go and buy gold, Bitcoin, you can trade Forex, you can trade all those assets all together, okay? But if you were to go and buy gold on Bitcoin on spot, okay, and gold, for example, so you can get gold, have those as the two assets, okay? Then, depending on how they're maneuvering, they're going to tell you if the risk is there, if investors are favoring high risk, low risk, okay? So let's assume you've done that. You've bought Bitcoin and you've bought gold, for example, on BTCC at the same time, okay? You then come to the NASDAQ and you say to yourself, what's the volatility like? Don't look too much for NASDAQ in terms of swing trading because it's a chaotic asset. If you're going to do swing trading on NASDAQ, just buy and hold it. Why? And buy it today because it's got a 100% success rate at recovering from crashes. So don't worry about it. It might take a knock to the downside of 25, 30%, but it's going to come back up. So just buy NASDAQ, okay? Or S&P, all right? Then what you do is you then come to the chart. So you're assuming that you've got Bitcoin spot, Bitcoin and gold on spot as well, okay? You go to NASDAQ and you say, I'm going to trade it. So for the day, you trade NASDAQ. Whatever profits you get, you dump them into Bitcoin, you dump them into gold, okay? Then you go over to the Forex market and then say to yourself, if the idea of interest rates is going to be lower, that means the yield on the dollar is going to be lower. So naturally, assets against the US dollar are going to go up. You're already in the benefit because Bitcoin and gold are paired against the US dollar, okay? So you know there's going to be appreciation there. Then you go over to Forex and you load up on longs on euro, playing on the idea that the yield on the dollar is going to be going lower, okay? Once you're done with that and you've got profits out of the NASDAQ and then play long-term plays with euro, okay? When you've taken profits out and you've still got Bitcoin and gold, then take some of those profits and speculate on stocks. Stocks that would see the benefit of Bitcoin going up. So that's going to be Circle, that might be Bullish, that might be Riot, that might be Mara, okay? It might be Cypher. You can trade Riot and Mara on here and you can trade MicroStrategy, okay? And if you see speculation happening into play with Google and Meta, you can exploit that on here as well. But what I'm trying to say to you is this. When you've got a platform that lets you hedge, because that's what this is, it's a hedging platform that lets you trade everything. But do not make the mistake of thinking that you can just buy and just not concentrate with it. You have to be interactive. So as a strategy, you would go Bitcoin long spot, gold, okay? And even silver, chucking silver in there as well. Because you're basing it on the idea that they are commodity based, okay? And we are in an easing cycle, so the yield on the dollar's coming down. So naturally, in the long run, based on when they turn around and say, we are stopping the interest rate cuts, when they say we're going to stop, that's when you then rotate. How long is that going to be? Well, we don't know. And it's not going to be for a while because we're just in the process of cutting. So we know we're going to have a little bit of time where Bitcoin's price is going to go up. Gold's price is going to go up because of the macroeconomic structure that we've got right now is suggesting that money is going to be cheaper later on. Now, do we factor in the idea of inflation? Well, yeah, we do. That's why we go long spot Bitcoin and gold and silver. So you're covering yourself there. If there is an event that happens that rocks the marketplace, what do investors do? They go to gold. Now, Bitcoin might take a tumble, but you've hedged yourself with gold and silver. Okay? That, for me, is a strategy that you can utilize, that I think everyone in investing should be doing. Don't limit yourself to one asset class. If you're a day trader, it doesn't matter. You can violate whatever market you want. If I want to go and trade goats, I'll go and trade goats. And you pull up Ninja Trader and look at the markets that are able to trade in the futures. It's brilliant. The only one that I can't find is toilet paper and oxygen. I mean, that is brilliant. But there's lots of markets that you can trade. But you have to be diverse. You have to know, like, okay, we're in an easing cycle. I'm obviously going to stay in dollars. I'm going to stay in Bitcoin and gold. So we can just hold on to those and just let everything run. Okay? But sticking to one asset class is not going to serve you at all. You have to maneuver. We're all day looking at the charts like, oh, why is dollar up? This is down. That is up. This is down. Because everyone's rotating, and then you're there scratching your beard, slapping your bald head, saying, I'm going to draw down on Bitcoin. Get out of it. Jump into gold. How many times have you seen NASDAQ make wild moves and Bitcoin burps? I see it in the Discord. All of you say it. Oh, Bitcoin's done nothing today. And then NASDAQ's just doing wild movements. You have to diversify. You have to. True diversification is jumping onto the thing that's moving. Okay? And what is not moving for a reason. It will move, but today it might not move. So you've got to act, in my opinion. You know? Now, with that being said, you can't trade onion futures. Yeah, you can trade onion futures. Coffee futures, orange juice is killing it. Bruv, watching you is pure comedy. I hope it is. I hope it is, my friend. I hope it is. Yeah, so just play around with the markets, ladies and gentlemen. Let's quickly go back into Bitcoin, have a look at what it's doing. See, Bitcoin's not... You know what? Today's response has been dead. Today has been a really, really dead response. I think we're going to get something later, but not now. I don't... It's very, very quiet. Euro's off. Okay, so they're moving the Forex pairs. NASDAQ, it's moving down a little bit, but I'm not worried about NASDAQ at all. Red vector candle in the brinks. Ladies and gentlemen, that is screaming happy days for me. The bonds market has been very volatile. 10-year yield on Japan's gone up to 1.8. And the bonds market's climbing up, ladies and gentlemen. So that is a bit of a sore sight. We need to pay attention to the VIX. Where's the VIX at? VIX is back down to the recovery and giving us a clue on what could happen next. I don't like this. I really don't like this. This, and this tells me that all of what we've just seen could get wiped out. No, I don't like it. Not very good. Not very good. Russell's doing well. Nvidia is dumping because Meta wants Google's chips. Okay, they don't want Nvidia's, so that's why Nvidia is dumping right now. Just quickly go over to it. Listen, they're going to use... I don't care what they say, right? But Nvidia is still doing well structurally. I mean, yeah, it's just doing fine. There is no problem whatsoever with Nvidia. It's just an accumulation, if I'm quite frank with you, ladies and gentlemen, so don't worry about it. Oh, my days. Vic, what's good, man? One of the OGs has just come in. Victoria's just popped in and said hello. What is happening? They are going to mark up the price to sell again. Listen, it doesn't... Right, look. All I'm saying to you is this, ladies and gentlemen. Your path to interest rates, okay? As long as this stays positive, okay? You are... That's why leverage trading screws you up. It does. Because if this changes down to 60%, oh my God, but then the next day it goes back up, that change in volatility could screw you over. But when you're sat in spot, okay, you can absorb much more. But we're in an interest rate cut, okay? The cycle has happened. Quantitative easing comes into play on the 1st of December. It's going to be a bit chaotic from now until then. But then we're going to go into the refinancing of corporate debt, okay? That's coming in towards the end of the year. It's all happening. Everything will continue to go back up. But they've got to claw the market back. They have to, because money needs to rotate. It's already tied up in other places because of the logic of why interest rates have been high for so long. So we've got to get that money out of there and we've got to rotate elsewhere so that we can then go on to the next cycle, which is another economic expansion. Let the markets contract. Prepare yourself for it. Monitor the assets that hold out during these times. Dump everything into ETFs, because ETF is the collection of assets. Go into the bond ETFs. Go into real estate income ETFs. Try and get dividends from over there whilst the market is trying to find its traction. Because if they said to us that interest rates are going to get cut from now until the end of, okay, then we know that inflation is actually enjoying the fight, that inflation's coming down. That's good news. But because it's fluctuating and it's sticky, okay, they don't know what the path's going to look like. So basically, the Fed is just taking a gamble. It is. All right? But we are getting cuts. The only thing that would screw it is if inflation shot up and they said, we've got to increase the rates. You don't hear them talking about that too much. So if they start talking about it, we've got major problems. Major. All right? With that being said, ladies and gentlemen, yippee-ki-yay, and I will tune into you all later on. Peace.